The story of Bitcoin begins in the ashes of the 2008 global financial crisis, a moment when faith in traditional banks and government-issued currencies was shaken to its core. As mortgage markets collapsed and the world watched giants like Lehman Brothers crumble, an anonymous figure, perhaps a group possessing the name Satoshi Nakamoto, quietly released a 9-page document to a small cryptography mailing list. That document, titled Bitcoin, a peer-to-peer electronic cash system, proposed a radically different way to move and store value. Instead of relying on banks to keep score and central banks to print money, Bitcoin would allow anyone, anywhere, to exchange digital cash directly, with the network itself acting as the trustworthy record keeper. On January 3, 2009, Nakamoto mined the first Genesis block, embedding in its code a pointed message referencing a newspaper headline about bank bailouts, the Times Friatno 2009 Chancellor on brink of second bailout for banks. With that single action, a movement was born that questioned centuries of financial tradition. To understand why Bitcoin matters, it helps to picture what it actually is. Imagine a ledger so public and transparent that anyone on Earth can verify every transaction, yet so secure that no one can secretly alter even a single entry. This ledger is the blockchain, and it functions without a central authority. Instead of a bank clerk or government database, Bitcoin relies on thousands of independent computers, known as nodes, scattered across the globe. When you send Bitcoin to someone, that transaction is broadcast to the network, bundled with others into a block, and verified by microscale participants who race to solve complex mathematical puzzles. The winner appends the new block to the chain and is rewarded with newly minted Bitcoin plus transaction fees. Crucially, the Bitcoin protocol dictates that only 21 million coins will ever exist. This hard cap creates a form of digital scarcity unprecedented in the realm of software, where duplication is usually trivial. Like gold, but weightless and instantly transferable, Bitcoin is often described as digital gold. The early days were a mix of idealism and experimentation. Tech enthusiasts, libertarians, and cryptocurrency known as subverfigners among the first to see Bitcoin's potential. One famous moment arrived in May 2010 when programmer Laszlo Henieks spent 10,000 BTC to buy 2 pizzas, marking the first documented real-world purchase using Bitcoin. At the time, those coins were worth about $40. At Bitcoin's later peak, they would have been valued in the hundreds of millions. Exchanges such as Mt. Gox emerged to let ordinary users trade dollars for Bitcoin, fueling dramatic price swings. In 2013, Bitcoin reached 1,000 for the first time, only to crash after Mt. Gox suffered a catastrophic hack. Yet each boom and bust seemed to attract more believers. By the late 2010s, institutional investors like MicroStrategy and even companies such as Tesla were adding Bitcoin to their balance sheets, lending a once fringe technology a newfound legitimacy. Supporters argue that Bitcoin is more than just an investment, it is a safeguard against the weaknesses of traditional money. Unlike national currencies, which can be inflated when central banks print more notes, Bitcoin's supply is fixed and its issuance predictable through having events that occur roughly every 4 years, cutting the reward miners receive and slowing the creation of new coins. In countries where inflation runs wild thick, Venezuela or Zimbabwe have used Bitcoin to preserve their savings when their local currencies collapse. Others prize its censorship resistance. Transactions cannot be blocked by a government or payment processor as long as one can access the internet or even a basic radio signal to relay messages to the network. For the billions of people without reliable banking, Bitcoin offers a borderless, low-barrier alternative. Every transaction is secured by cryptography and verified by a decentralized community, creating a monetary system governed by open source code rather than political whim. Of course, Bitcoin is not without controversy or risk. Its price is famously volatile, with swings of 20% or more in a single day, making it nerve-wracking as a savings vehicle or medium of exchange. Environmental concerns loom large as well, because the network's security depends on proof-of-work Miningslov's energy-intensive mathematical puzzlestickers warn of excessive electricity consumption. Some countries, like China, have cracked down on mining operations, while others explore greener energy sources to power them. Security remains a double-edged sword. The blockchain itself has never been hacked, but individuals can lose everything if they misplace their private keys or fall victim to scams. And while some governments cautiously embrace Bitcoin, others view it as a threat to monetary sovereignty, introducing regulations that range from heavy taxation to outright bans. Today, Bitcoin stands at a fascinating crossroads. The network continues to evolve with innovations like the Lightning Network, a layer-to-solution enabling near-instant, low-fee payments that could make small everyday transactions practical. The approval of exchange-traded funds ETFs in several jurisdictions has opened the door to mainstream investors who once found crypto too technical or risky. Central banks worldwide are experimenting with their own digital currencies, known as BDX, partly inspired by Bitcoin's success but often lacking its decentralized nature. Geopolitical tensions, inflationary pressures, and the search for uncorrelated assets have driven new waves of interest, pushing Bitcoin into headlines once reserved for gold or oil. Speculating on Bitcoin's future invites both wonder and humility. Could it remain primarily a digital gold, a long-term store of value held by individuals, corporations, and even governments? Might it become a widely used global currency, enabling instant, borderless commerce? Technological threats such as quantum computing could someday challenge the cryptography that underpins the network, though developers are already exploring defenses. Some envision a world where Bitcoin forms the backbone of interplanetary trade or integrates with smart contract platforms to enable decentralized applications. Others believe its greatest achievement will be more philosophical, proving that money can exist independent of any state, controlled by mathematics and a global consensus of users. As we close this exploration, remember that Bitcoin is more than lines of code or a speculative asset charted on trading screens. It is a social experiment, a living network, and a statement about trust in a digital age. Whether you ultimately buy a fraction of a coin, build on the technology, or simply observe from the sidelines, understanding Bitcoin is increasingly synonymous with understanding the evolving nature of money itself. Its story of resilience, innovation, and relentless decentralization to unfold, block by block, inviting each of us to consider how value is created, preserved, and exchanged in the 21st century. Bitcoin's influence extends beyond finance and technology has also reshaped culture and psychology. Early adopters often describe a sense of empowerment that comes from controlling one's own money, free from banks or government oversight. This psychological appeal is magnified by stories of individuals in oppressive regimes using Bitcoin to bypass capital controls or send remittances to family members. The idea that anyone with a smartphone or basic internet access can participate in a global financial network challenges long-standing hierarchies and invites millions to rethink what wealth truly means. Communities of enthusiasts share memes, tutorials, and forums, creating a subculture that celebrates transparency, innovation, and self-sovereignty. Globally, Bitcoin adoption has been uneven but steadily growing. Countries like El Salvador have made headlines by recognizing Bitcoin as legal tender, while others, such as Nigeria and the Philippines, see citizens using it to hedge against inflation and facilitate cross-border payments. Institutional adoption is also on the rise. Large corporations and investment funds now allocate portions of their portfolios to Bitcoin, seeing it as a strategic hedge or a store of value similar to gold. Even central banks are watching closely, experimenting with digital currencies inspired by Bitcoin's core principles. This combination of grassroots adoption and institutional recognition demonstrates that Bitcoin is no longer a niche experiment but a globally relevant financial instrument. Technological innovation continues to shape Bitcoin's evolution. Developers are working on scaling solutions, privacy enhancements, and interoperability with other blockchains. The Lightning Network, for example, allows microtransactions to occur almost instantaneously with negligible fees, overcoming one of the major criticisms that Bitcoin is impractical for everyday use. Sidechains and Layer 2 applications are expanding Bitcoin's capabilities, allowing it to interact with decentralized finance DeFi ecosystems and smart contracts without compromising its core security. These technological advancements suggest that Bitcoin is not static, it is a living network evolving to meet the needs of both individual users and global financial markets. Yet understanding Bitcoin requires an appreciation for its risks as well as its potential. Market volatility is extreme, and price swings of tens of percent in a single day are not uncommon. Security is paramount. Losing a private key or falling for a scam can result in permanent loss, and while exchanges offer convenience, they also present points of failure. Regulatory landscapes are uncertain, with governments continuously adjusting policies, taxing profits, or imposing restrictions. This combination of innovation and risk means that anyone considering Bitcoin must do their research, exercise caution, and avoid treating it as a guaranteed investment or short-term get-rich-quick scheme. Its value lies not just in profit potential but in participation in a transformative technology. Finally, Bitcoin invites us to reflect on the very nature of money and trust in society. For centuries, humans have relied on institutions, governments, and financial intermediaries to store and transfer value. Bitcoin challenges that paradigm by demonstrating that trust can be decentralized, enforced by code and consensus rather than authority. Its existence encourages debate about privacy, freedom, and the future of global finance, asking each of us to consider what we value in a monetary system. Whether Bitcoin becomes the foundation of a new financial world, remains digital gold, or inspires further innovation in decentralized technology, its impact is undeniable. By studying, using, or simply observing Bitcoin, we engage with a historic experiment that may redefine the rules of money for generations to come.